Opendoor heads into the new week with the stock closing Friday at just over $9 and change, holding steady around the same level where much of the recent drama has been unfolding. And as we look toward the pre-market session on Monday, there's a fascinating collision playing out between what's happening inside the company and what's happening in the market. On one side, you have a brand new CEO who is making sweeping changes at a pace nobody expected. On the other, you have a pile of institutional shorts who are now sitting in uncomfortable positions. The story here isn't just about the price of the stock ticking up or down from one day to the next. It's about a company that is resetting its DNA, rewriting how it operates, and in the process creating the possibility of new catalysts that could define the next stage of its growth story. Let's begin with where things ended last week. Opendoor had an incredible run earlier in the week, pushing above $10, and although it gave some of that back on Thursday and Friday, the stock still held its ground around that $9 to $10 band. For any normal company, 2 red days might feel like a warning sign. But in this case, what makes it interesting is that optimism hasn't really faded. The reason is that shareholders aren't just looking at short-term candles on a chart. They're watching the company transform in real time under Kaz Nejatian, and that sense of speed, decisiveness, and direct communication is giving the market a new type of conviction. Even with profit-taking and volatility, there's this feeling that something bigger is building underneath. And that leads us straight to the reset happening inside Opendoor. If you've been following the story, you'll know that Kaz has wasted no time in putting his stamp on the company. In his first week alone, he's already parted ways with external PR agencies and made it clear that communication will now come directly from him and from the company's own accounts. That might sound like a small operational change, but symbolically it's huge. It tells investors that Opendoor doesn't want a filter, doesn't want a spin machine, and doesn't want to waste time running its message through outsiders. It wants to speak directly, clearly, and quickly. That kind of move echoes the way Elon Musk handles Tesla and SpaceX, and it signals a culture shift that prizes speed and authenticity over polish. But communication is just the start. Perhaps the most striking decision so far has been the acceleration of Opendoor National. Originally Kaz said the nationwide rollout would take weeks. That was the plan just a week ago. Now he's already flipped the switch and announced that the rollout is happening immediately. That's not just fast. That's lightning fast. It sends a clear message that this is not the same old Opendoor. This isn't a company that dithers, waits for consultants, and cautiously pilots small projects before taking the plunge. This is a company that acts. And for investors, that decisiveness is exactly what they've been craving. There's also the issue of pricing. Kaz has said that even the pricing models of existing products are being revamped. That matters because pricing sits at the very core of Opendoor's business model. Every transaction the company does, every home it buys and sells, every customer interaction, all of it flows through pricing. If they can optimize that model with more intelligence, more AI, and more dynamic adjustments, then margins improve, scalability improves, and the entire machine becomes more efficient. It's a domino effect. One change cascades into many benefits. And that's the kind of thing that gives investors confidence that the company isn't just moving quickly but moving smartly. So what you're seeing is an internal transformation built around speed, directness, and intelligence. Kaz is essentially looking at every corner of the company and asking, where are we too slow, where are we too cautious, and how do we strip that away? That's the essence of a reset. It's not about small tweaks. It's about rewriting the DNA of the organization. And that's what makes this moment so important. Because while all of that is happening inside the company, there's another story unfolding outside, and that's the story of the shorts. By now, we all know that Martin Shkreli announced his short position at around $9.36 a share. But he isn't the only one. A list of institutional players has emerged: Squarepoint Ops, Jane Street, Group 1 Trading, Simplex Trading, Walleye Trading, and they're all shorting Opendoor. These aren't small names. These are big, well-funded, highly sophisticated players. And yet, with the stock holding around $9 to $10 and pushing above 10 earlier in the week, many of those positions are now in the red. That creates a dilemma for them. Do they double down and hope the company stumbles, or do they start covering and admit that they misjudged the moment? That tension is building, and it adds another layer to the setup. This is where things get really interesting. Because it's not just about a short squeeze on its own, and it's not just about a leadership reset on its own. It's about what happens when those two dynamics collide. On one hand, you have a CEO moving with unprecedented speed, reshaping the business model, cutting unnecessary layers, accelerating national rollout, revamping pricing, and communicating directly with investors. On the other hand, you have a cluster of shorts who are already under pressure, sitting on losses, and trying to figure out their next move. When those two forces meet, you get the ingredients for something explosive. It's a tinderbox. And every incremental win from Kaz makes it that much harder for shorts to stay in their trades. But here's the thing. For this story to move to the next level, Opendoor needs catalysts. It needs fuel to keep the momentum going. And that's where speculation about what the company could do next becomes important. Let's think about it. The first big catalyst would be concrete execution updates. Investors don't just want broad strokes about a national rollout. They want numbers. How many homes are being processed? What's the margin improvement? How fast are transactions closing? If Kaz can deliver those metrics in the coming weeks, it validates the speed narrative with data, and that would be powerful. Another catalyst could come from AI and product visibility. We've heard hints about new AI-powered tools like Ernie and about pricing revamps. But now the market wants detail. What are these products? How do they work? What makes them different from competitors? If Kaz reveals more about how AI is being embedded in the business model, it strengthens the case that Opendoor isn't just a real estate company but a tech disruptor in the truest sense. That's the kind of thing that resonates not just with retail investors but with institutions that are looking for growth names to own. Partnerships could be another big driver. We already know that Leonard Stewart Miller has given public praise to Opendoor. If we start seeing more endorsements from big players in the housing market, whether that's builders, lenders, or other partners, it provides validation at the highest level. It tells the market that Opendoor's model isn't just compelling to investors but to the industry itself. And that kind of credibility can unlock new demand. There's also the question of financial discipline. Keith Rabois has already been vocal about the company being bloated, suggesting that only about 200 of its current 1,400 employees are truly necessary. If Opendoor follows through with cuts and becomes leaner, it not only reduces costs but signals to the market that leadership is serious about efficiency. That ties back to Kaz's culture of speed and decisiveness. Execution on that front would be another catalyst. And of course, there's the national rollout itself. It's one thing to say you'll live across the lower 48 states. It's another to show how that expansion translates into revenue growth. If Opendoor can report real traction from its accelerated rollout, in terms of transaction numbers, adoption rates, or market penetration, then that becomes a tangible proof point for the growth story. Every one of these potential catalysts has the ability to shift sentiment further in the company's favor, and when you combine that with the pressure shorts are under, the feedback loop could be intense. At the same time, it's important to acknowledge risks. Execution risk is real. Moving this fast can create cracks if systems aren't ready or if the culture doesn't adapt. There's also the risk of dilution if the company needs to raise more capital. And of course, the broader housing market remains a wild card. Interest rate volatility, inventory shortages, and macro uncertainty could all affect Opendoor's ability to deliver. Shorts know this, and they'll be watching for any sign of weakness to press their case. But what's different now is that the balance of momentum seems to be shifting. For the first time in a long time, the story is less about retail chatter and more about company execution. That's exactly the kind of reorientation that can build sustained investor confidence. Technically, the key levels to watch this week are clear. Support sits around $9. Resistance is building around 11 to 12. If the stock breaks below 9, shorts gain breathing room. But if it pushes decisively above 12, the pressure on shorts could escalate rapidly. That's why the pre-market action on Monday will be telling. Does the stock open strong and push toward resistance, or does it trade cautiously and drift toward support? Either way, those levels will frame the battle between bulls and bears this week. So where does that leave us? The simple truth is that this isn't just about whether the stock goes up or down $1 today or tomorrow. It's about whether Opendoor can keep creating catalysts that force the market to reassess its valuation. Kaz has already delivered in his first week with decisive moves that shocked investors. The question now is what comes next. If he can keep the pace, keep unveiling new updates, and back it up with data, then shorts may find themselves in an impossible position. And if that happens, the covering itself becomes a catalyst, fueling a rally that reinforces long-term conviction. That's the dynamic to watch as we step into this new week. In the end, the Opendoor story right now is about three things: speed, transformation, and pressure. Speed from a CEO who isn't wasting time. Transformation of a company that needed a reset. And pressure on shorts who may have underestimated the determination of this leadership team. That combination makes this one of the most compelling stocks in the market heading into Monday. And while the road ahead will no doubt be volatile, the direction is becoming clearer. For investors who believe in the mission, in the leadership, and in the opportunity, it's a story that is only just beginning.